Hi everyone. Today let's talk about the CPI data, then we'll get into the economic data and the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So CPI came in hotter than expected, but it really didn't move the markets very much. Definitely interesting. Core CPI came in at 0.3% and 4.3% for month over month and year over year. Month over month was expected to be 0.2, so it was a little bit higher than expectations. Energy was up quite a lot. We've been talking about that and how it's been going higher. And I still expect it to continue to go higher. Real wages declined by 0.5% this month. Not great for the paycheck to paycheck worker. For the headline number, we were up 0.6% and 3.7% from a year ago. And we can see that step up here to 3.7. We were all the way down at 3% in June, and we've been going a little bit higher. We expected core and headline to come together. That's typically how it works, so we overshot it to the downside, and now we're coming back together. Core still doing okay. The month over month was hotter like we talked about, but not terrible. It's still technically trending down, and I think that's part of why the markets didn't really react too much. 4.7 down to 4.3 is still a substantial step down, even if it was a little bit higher than what we thought it was going to be on the month-over-month numbers. Food prices went up 0.2%, so food and energy both going higher, which is why we got that higher headline number. Overall, not terrible, and markets didn't really care that much. Moving over to the economic calendar, you can see those numbers here, 0.2 versus 0.3, year over year, right on the money. Headline, a little bit higher than expectations. Month-over-month headline, actually on the money, definitely interesting. Looking at federal budget, however, maybe this is part of why we were seeing a little bit of bullishness in the markets. Somehow we actually had a surplus in the federal budget, much better than expectations. Forecast was minus 240 billion. We ended up getting a surplus of 90 billion. That's definitely interesting. And that should help the fight against inflation at least a little bit. Looking at tomorrow, we're not off the hook quite yet. We still have core PPI, retail sales month over month, headline PPI month over month, and then retail sales month over month. So quite a bit of stuff coming out at 8:30 tomorrow. Moving over to Max Pain, still sitting at 440, quite a bit below where we are. We've been talking about 440 to 450 for a while. Still don't think we're going to get above 450, and it would make sense if we finished between 445 and 450. Been talking about that for a while also. Put call ratio still at 2.28, total options right around 4.3 million, and it seems like we're kind of trapped in this zone going into the end of the week. Moving over to the charts, it was actually a pretty uneventful day. So you can see those wicks to the downside on the announcement. And then we ended up holding that level, rallied right up to trend resistance. We continue to chop in the zone. We have a bunch of EMAs basically on top of each other, except for the 144, which is still to the upside. We did end up slightly bullish on the day. You can see 0.12%, slightly bullish doji, momentum still fading towards bearish, RSI not telling us much of anything. We're kind of trapped in this wedge. You could probably adjust this a little bit here to give you a better perspective, but we're stuck in this wedge. Either way you want to look at it, not going anywhere quite yet and waiting for some clear direction. Moving over to the Qs, you can see very similar structure. Pushed down in the morning, rallied into the midday, fell into the end of the session. Slightly bullish on the day as well, 0.38%, still in this structure, going sideways with no clear direction. Momentum, same as the SPY. Volume ticked up a little bit, which was interesting on that bullish day. Might be looking for a slightly more bullish day coming off of these EMAs. They're not quite consolidated the same way that they are on the SPY, which does look a little bit more bullish. We're still holding above that 200 SMA on the hourly chart, sitting at 335.23. And I still think we might get a push up to 376.45 tomorrow. Moving over to the Russell and the Dow, the Russell looked abysmal. It took out my level at 183.28, so I didn't put on any positions in there. I just watched it fall throughout the session. You can see we're right at these previous lows going back to August 25th as well as the 17th and 18th. If those wicks are taken out, then we're watching all the way down to 178.17. This just continues to look super bearish, especially with that level breaking down here. There's really been no good trades to the upside. Looking at the Dow, you can see big wicks to both sides on that first candle on the 4-hour chart. Still trading within this same zone. You could be watching that 21 EMA at 346.53. If that level holds, you should be looking for a push up to these next levels, and the 200 sitting at 349.37. Momentum still fading, RSI still looks weak, but this highly traded zone and the 345.24 level continue to hold. Again, not a lot of clear direction on the Dow. Moving over to Apple and Tesla. Apple continues to move lower. We talked about that yesterday. Big bearish candle on their event. Bearish momentum, bearish RSI continues to look weak. We're sitting right at that 144 here on the daily chart, 173.78. Could be an interesting level. If that breaks down, obviously that'll be super bearish. Dynamic support would be down at the 200 on the daily, down at 164.45. That could be interesting. I also have a level here at 170.90. Either way, this looks weak. Tesla, slightly bullish day. Doesn't look like a lot, but it was actually 1.43%. So gapped up through some wicks, rallied a little bit, still bullish momentum. We talked about how it's coming off of that really bullish report from Morgan Stanley, and I still expect this to be bullish. It does look bullish going into tomorrow's session. Moving over to Amazon and NVDA, Amazon continues to be on a rocket ship. It did stall out a little bit yesterday, but pushed way, way higher again today. One of the top performers, 2.56%, super bullish momentum, super bullish RSI. It's now broken out above this previous high, pushing up to 145.55, couple of cents higher, and then I would expect it to break out, honestly, up to about 150 in my opinion. NVIDIA had a bearish day yesterday, but pretty bullish on the day today, 1.37%. It's still below the 9 and 21 EMAs, but it's above the 55, so you could argue we're kind of consolidating here at this highly traded zone. Momentum could be cooling off towards the bull side, RSI pulling back to the SMA. Certainly could get a little bit of a retracement here. Still a bullish structure overall, but might get that cross soon, and then you could argue for a little bit more pullbacks. NVIDIA has been a monster here, so I wouldn't suggest shorting it at all, which is part of why this looks a little bit more attractive now that it's bounced a little bit off of that 55 EMA and my 447.13 level. Moving over to staples and discretionary. Staples continues to curl up a little bit, tested that 21 EMA, ended up holding, looked a little bit more bullish here today after that big bearish day yesterday. You still have a mixed structure, so 9 is above the 21, but still below the 55. And we're below the highly traded zone, which is not bullish either, but we're making a series of higher lows, which is interesting. Discretionary continues to chop at resistance around that 173 area. You can see this previous consolidation. That's basically the highs before we had these longer term highs at 174.76. Momentum fading, RSI fading. You can see how high the RSI was on the 11th, and then we're basically at that same price, and RSI is much lower, so you have a little bit of divergence there. Unless this rockets up and we get a new high and RSI goes with it, you're probably looking for a bit of a pullback here, in my opinion. Moving over to breadth, this is not what you would want to see if you're looking for a little bit more bullishness. 50-day average testing 32.22 once again. Took out this level here that I was watching, showing that divergence. So right now we're back at like a double bottom type setup. 200-day average continues to make new lows. This was a new low close on this move down. So not great. If we get a big leg down here through that tomorrow, down to 43.55, then this might be a falling wedge and we have to kind of wait for that to finish, which would be a little bit more bearish. It is worth noting that we still have pretty clear divergence on the RSI for both charts. You can see we're at the same level here on the 50-day average, but the RSI is much stronger. Similarly here on the 200-day average, we are at a new low, but the RSI is much higher as well. So divergence on RSI, divergence on price between the two. Still showing signs of a potential reversal, but not quite happening yet. Moving over to the dollar, pretty uneventful even on the CPI day. We rallied through the night. Then you can see that wick on the announcement, threw a wick to both sides. RSI still hovering around that 50 line. Still a technical bull trend. Not all in line, but pretty close here. 9 is above the 21, which is above the 55. And we're still getting topped out at that 144. So a little bit of consolidation. Daily chart, obviously a bull trend. But we're not quite making new highs here either. So consolidation between 104.41 and 105.50. Moving over to JNK and TLT. JNK showed some bullishness on the day. Right at that highly traded zone. Looks like it's pushing up to 92.50 again. That would be interesting, showing a potential for some more bullishness. Looking at TLT, we basically unchanged on the day after testing the 21. RSI continues to trend higher, which is interesting despite price staying about the same. So a little bit of divergence there as well. You can see how much lower the price is versus this previous low where we had oversold conditions. Potentially looking for a bit of a bull move, but not happening yet either. Moving over to the volatility indices just for a moment. These are really not doing much of anything. Gapped higher on the CPI data, fell throughout the session. We're still in the same consolidation, not doing much of anything. Momentum pushing lower off of the SMA on the daily chart for the VIX. We also took out these previous lows. You could argue that there's a little bit more bearishness to come. Move index broke down, retested, broke down further. If it takes out this previous low here, that might be a little bit more bullish for bonds. That could be interesting. But right now, we don't have anything clear yet. Moving over to my accounts, like I said, the IWM looked weak all day, didn't do much with that. You can see I didn't trade anything in my Roth account. Qs, I just left my core position, which was fine. We went sideways on the day. I rolled that call up and out, and now I collected $1.55 on each of those. So far, the Qs are up a little bit after hours, so it's showing a little bit of loss on that, but that's fine because I have the shares here. My max profit level is 175.55, so I got about another $1 of upside potential there. And I could also play some puts if it starts to look a little bit more bullish to the upside. That would be interesting. Like I said, on the shorter time frames, it does look okay. Daily chart still looks like we're consolidating. Let me know down in the comment section what you think of the CPI data. Is inflation just getting a shorter term pullback where we're seeing headline and core come together? Or is this the start of a longer term spike and we need to be concerned? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for our entertainment purposes. Good luck in your trading and have a great day.